Hi guys, welcome to my new video. In this video, we'll be analyzing the NZDCAD forex pair, the New Zealand dollar in relation with the Canadian dollar. So you can see I have a daily chart open. Price surged up with strong momentum, and from this level onwards, the price is constantly moving down with lower highs and lower lows. Okay? So let me just mark it so that we are clear where the price is currently headed. So this is the current direction of the price, and you can see it is downward sloping. So currently this price is in a downtrend. So I like to go with the trend, what the price action says. So price action is the king. So if it's saying the price is going down, I'm not going to bet that the price will break this trend line, jump up and suddenly go up until price action shows this. So now if I have to go short on this pair, or my bias is downward trending towards this pair, let's see what more confluences or what more things we can have, because whenever market gives you trades, mostly it has multiple factors. You won't see a trade playing very well if you take it by a single factor, right? You can get good returns, you might be even profitable, but what I like to do is I like to analyze a single trade with multiple lenses or multiple factors, right? Because there are multiple lenses of looking at the same thing, and if all of those point me in the same direction, then I must be doing something right. So with that, we see price approaching this trend line. So currently the market is closed, but when it opens, you can see that price is going to approach this trend line. Now let's see what more confluence zones we have. So here is a zone. Let me draw this zone. So here you can clearly see we also have a resistance zone. So price came down, jumped from it, right from this candle, and when it broke through this, you can see it resisted once, got down. Here it showed that price is breaking up from this. So if you were a trader who solely focuses on, say, support or resistance, right? So let me remove this for a while, right? And let's say this did not happen. Price was currently here, right? You marked one major support and resistance. So till here, this is support. Now you can say this is resistance. So when price would be breaking up right here, you would instantly go long, right? For you, the price is going up. It's breaking this zone. You can back yourself up and you would go up. You would buy this pair, and as you wouldn't expect, it would hit your stop loss and then again start trending downwards. So this is what most retailers do. They usually base their trades on a single thing, and this is what I do not like to do. Right? When I am taking a trade or when I'm analyzing a pair, I usually go full rockets into it. I like to analyze it using multiple lenses, right? So with that, let's get back to it. Here we can see the price is approaching resistance, right? So this is twice now stronger, since you have this resistance and also this downward sloping trend line. Now let's pair it up with a Fibonacci, right? So if you follow my YouTube channel by now, you should have known that, and you must have known that I also use Fibonacci, since they prove as very strong support or resistance zones. So here, if I just roughly place it around the bottom, you can see price is currently at the 50% Fibonacci, but it can still go up. And when it connects to this area, the 618, which is the golden Fibonacci level, will perfectly line up with our trade, right? So here we also have a 618 Fibonacci level whenever the price meets up to this area. So that is another confirmation for me when I'm analyzing. With that, I also found out a very strong moving average. So I like to select the moving average ribbon, since I don't have to select multiple average one by one. So it gives me straight four averages, and I can keep what I like, what corresponds to the trade and what is relevant to the pair. So here you can see the 200 moving average on a daily time frame is also coming over this resistance. And as price will slowly move up, this will also come up to this area, and price has a very high probability of rejecting this as well. So that is another layer which gives us confirmation, right? So now what do I want to see more? Let's see what the RSI says. Right, so guys, you would have noticed that I'm not blindly looking at the indicators, right? That I won't buy when the RSI is say 30 and I won't sell when the RSI is 70 or 80. I pair these up with multiple other factors. So number one is price action is the king. So this is the first most for me, that whenever I start analyzing a pair, it will solely be based on price action. And then as we dig down, we dig deep, then I go into multiple things, multiple factors that can support my trade. So here you can also see that the RSI is also climbing up. So currently it's 65, and as price moves up, it will reach this zone 70. So this is also a confirmation signal for us that RSI is in this area, which is typically a sell zone. So with that, the daily time frame would also suggest a short. Now, there is one more interesting thing going on with the RSI, which is not simply it will reach the 70 peak. What this is you can see that here RSI, to be precise, was around 68, 68.99, approximately 68 to 69. When this price will peak up, since it has some time to go up, right? It is 81, it will peak at least till 82.5, 82.6. So what I expected, RSI will go above the last peak. So if you know what I mean, this will be a bearish RSI divergence, because RSI is currently till 65, 66. So when this peaks up, the RSI will also go above the previous peak that we have, somewhere around this level, and price will come, it will test this level, and then RSI should drop down. Now what this is, so here I have what we call as hidden bearish divergence. So you can see the price is making lower lows, right? Here price drop down lower than this and then again drop down, but you can see the RSI made a higher high, right? Price made a lower high while RSI made a higher high. So this is a classic bearish divergence. So this is a strong, very strong factor, right? If you just stop seeing RSI is 30 or 70, a band that oscillates between these two things, and you try to find out these divergences with such momentum, they will surely work in your favor. So now it is clear to me, this is also, it's not yet, but it will build up as a bearish RSI divergence. So the trade that I would clearly be looking for, right? So now I'll just close it. The trade that I'll clearly be looking for is price to surge up, test this area, and then move in the downward direction. And what would be a reasonable target? If you see here, if you see this level, price is respecting this trend line also when it moves down. So you have seen 3 touches of this level, and now we can be ready for a 4th touch. So if I bring out the short position, and if I'm short somewhere in say this area, and my stop loss would rest above this moving average, somewhere say here, my profit would be this level, and it would go, it would not nuke down, it would take some time, so it will take some days. So you can say it is around this level. So you can clearly see the prices, the risk reward is 1 to 6. So if I go at this basic numbers, if you are risking $700, how much you can gain? You can gain $2,500. So it's 1:6 reward ratio. Right. So this is again a great trade that I just spotted, and I wanted to share it with you guys. So that's it for this video, guys. See you in the next one. Until then, bye bye.